Everybody, welcome to Tribal Trades. This is it. Life-changing gains. Money printing method, part 4. If you haven't checked out lessons 1 through 5 of life-changing gains, please do so. And technically this is lesson 6 of life-changing gains, but I split it up into 4 parts. Part 1, 2, 3, and 4 are all dedicated to the money printing method. So if you haven't seen parts 1, 2, and 3, definitely you want to go and check these out before you watch part 4. And of course, you can watch all of the money printing method episodes first and then go back and watch life-changing gains lessons 1 through 5. I do recommend it because it will help you trade this method. We're going to jump right into the charts. And as always, this is not financial advice. I'm not a financial advisor. This is for education and entertainment purposes only. Okay, we're going to be talking about stop losses here. Where do we put our stop losses? That is such a great question because you do want to protect your capital. You don't want to suddenly have a trade here and not have a stop loss and and then can't get back, and now we're all the way down here from $1.14, and then how long are we going to be down here for? And all during that time you cannot trade your capital. And you can't go short because you've still got a long open unless you've got a separate account and you hedged yourself. But as always, you want to have stop losses. Even when you're trading spot or leverage, have stop losses. Protect your capital. Okay, so where are the first places that we want to put our stop loss and where we can kind of help protect the capital? Okay, so the first place you want to put your stop loss is at the second lower EMA. So the lower EMA. And it might be easy to show over here, is it? Yeah, we can I need to see them where they're apart from each other. So the lower EMA here. So a stop loss could go here, right here. Now, of course, you would have ended the trade. And of course, remember that you can move your stop loss up. So let's just say that you have ended the trade. Where would you got in the trade here? Did we come into here? I think we did. Let's just say we ended the trade, and the stop loss would be down here. But as we get up to here, we can move the stop loss up and keep moving it up. And in fact, you can move it even higher, and you can say, look, I don't want to re-enter here. I'm already in enough profit from down over here. I already made 109 to 113. I already possibly a couple $100 there. I already made there, or a couple of thousand. If you're trading with bigger dollars, you can certainly make much more. So certainly don't let there be any limitations there, but you also can move your stop loss up. Now, if you're using leverage, you can use a trailing stop loss where it actually trails the price. And so you could put your stop loss here. I'm just saying that if you want to have a dedicated area, if you're wanting to look back to get in the trade all the time and get out and then get back in, that your stop loss can be at the bottom EMA, this bottom yellow EMA. The second place that you could put your stop loss is at the bottom of the green ribbon or the red ribbon, depending which way you're trading. So that's the second place you could put it. So you've got a couple of options there, one here and one there. And remember, you can move your stop loss up as price goes up and put it in areas where you feel you're happy to. You don't want it to go down. You don't want to lose any of that profit if you haven't taken profit. And then you've got the bottom of the green band. Now, the third place that you can put your stop loss is the 200 EMA, but generally I only do that if the 200 EMA is fairly close to price. It's not too bad here. You can see it here. It's in there, so I wouldn't put it there. I'd choose either the second yellow band. I would choose the green band. But this isn't a bad place to stop loss here because you can see it's kind of actually when it hits there, it goes back into there and then it comes back. And then you can see that here actually it's the 200 EMA is not too far away from that. You can see the yellow here and then the green, and there could be a possible 200 EMA. Now, sometimes the 50-day moving average can be okay, but that's quite far away from price. So in this case, I wouldn't use the 50-day EMA and 50-day, it's not the EMA, the 50-day simple moving average in this case. I wouldn't use it. So yeah, so you look there. I wouldn't use the 200 EMA there because I would prefer to use this. I only use the 200 EMA when it's slightly underneath the price. Now, where else might I use a stop loss is if there is the Lux Algo order book. And so let's see if we can see an example of this. Okay, so if I was short here and I was coming back, I may not put my stop loss here or here. I might put a little bit further up because, first of all, it's a Fibonacci and it's an order block. So I might not want to put it just there. I might want to let it, I might want to put it right at $1.07 rather than when this red band ends at about $1.06. So that also is an opportunity there when you look at it, is you've got some opportunity to set your stop losses at kind of three different places. Now, in this case, once it starts to get quite far away from the ribbon, then that doesn't make sense. Although you do have the order block that is here as well. So if you were short here, you'd probably have taken profit by now, waiting to come back in to price. But let's say we come back here, and at some point we will. There's the option here is to stop loss here, and these are the more aggressive ones, but you could actually put stop loss here and here as well. So you got kind of four options there, and if you really wanted a loose stop loss, you got one there at the 50-day moving average as well. So you got some options there. I don't like showing shorts and bearish in a bull market because I don't want people to feel encouraged. So I'm going to look for some long price action here. So in here, the stop loss, it would be better here and here. This is quite far away from it, so I probably wouldn't put stop loss there. And we've got no Lux Algo, although that price is bullish. There's no Lux Algo there, because that price is very bullish. There's no Lux Algo there because it only shows on a live trading chart. So as you can see, there are a few places that you can utilize the stop losses here on the chart. And again, the bottom, the yellow one here, good stop loss, the 200 EMA, and we'll come back to here. You've got the Lux Algo and you've got the 50-day moving average. But again, I'm very loath to use the 50-day moving average or the 200 EMA if it's too far away from price, because I'll take too much of a loss. That's too much of a drop. And it really depends where the entry is. If I got my entry here at around $1.12, well, if I come across to here, the entry is at about $1.12. So then, but I think, well, do I just want to be break even? So I'd say, hey, I can move my stop loss up or move it up to here and get stopped out at $1.14, even though it got up to a high of $1.17. And so there are some quite ideas. And also you could use this to help guide the stop loss as well. Like if you see a lot of volume here, we've also got the Lux Algo. We've got the 200 EMA there close as well. And the 50-day moving average is around that area. So I would say just look at your risk to reward. Say, how much money am I going to lose if I put my stop loss there? How much money am I going to lose if I put my stop loss there? And if you feel that is acceptable loss or an acceptable amount, it might just be a small amount, then, it's your money. But you have to manage your risk and have to manage it appropriately and wisely. And that's why I do recommend setting up test accounts. You can use Bybit and MEXC. There are links in the description below, and you can set up a test paper account first. If you want to test this method, if you want to test whether you can trade this method, then you would go in and set up a Bybit or a MEX paper account. It's a fake money account. You can trade all the real stuff, but no money. Any losses are not real losses. Any gains, unfortunately, are not real gains. It wouldn't be great if all the gains we made were real and all the losses weren't real. And so therefore, you are able to practice, and you can practice and see how you can make this work. And there are certainly many ways to trade this system. I've only shown you the way that I trade it. I'm fairly in and out, in and out, in and out. You can have multiple take profits on the way. You can just have one take profit, or you can have multiple take profits on the way up. So you can leave the trade run for longer, especially if you just don't have time. You've got a full-time job and you're just not sure if you can put a lot of attention to it. But it does mean that you do have to keep moving your stop loss up over time, because as price moves up, to make sure that you lock in some profits, and you don't want it to suddenly just go back and you lose all your profits and you stop loss at your entry. Although a stop loss at your entry isn't the worst thing. It's better to stop out and no loss at all, and you don't want to see it like you saw it just happen. It went from $1.17 and now we're all the way down to $1. We do have Bitcoin correcting a little bit. There is some news and some stuff going on this week that is influencing the Bitcoin price, and that is causing alts to have a bit of a drop down. Anyway, that's it. That's part 1, 2, and 3, and 4 of the money printing method. And there is also a few other ways that you can kind of trade this on a more longer term scale. You could certainly let it ride up, but certainly you have to be prepared to move your stop loss up and get stopped out in profit. So at the end of the day, it is more of a short-term, day-to-day strategy, but you could certainly hold a position open for a day or two, maybe 3, and make some good profits. Like we saw on that Sui trade, there was a full 2 days that you wouldn't have gotten stopped out, and the profit and the coin just kept going up and up. You just have to be prepared to keep moving your stop loss up with it, or you set a trailing stop loss if you're using leverage. So you can really automate it a lot more using leverage, but cannot overemphasize. I've let this go a couple of minutes longer, the importance of having a stop loss and protecting your capital, because you do want to be able to pivot between long and short. Generally, I tend not to want to go short in a bull market or when we're having a big push up. But I think when we've had a major correction like we have, we're almost 90 days in this correction right now, it's not a bad idea to look into, you can make money playing the short game here as well with leverage trading, but very careful that you don't get wrecked. Have some stop losses in place. You don't want to get liquidated, and you want to make sure that you're an experienced trader, and I recommend no more than using 3x leverage. All right, that wraps up part 4 of our money printing method, life-changing gains. This was lesson 6. Please go check out all the other stuff. There's links, helpful links in the description, and until the next episode, happy trading.